CEO of McKenna Capital. Welcome to our Bitcoin Mining State of the Union investor webinar. We're excited to put this update together, and I just want to thank everyone who's joining us here tonight. We have Anh Tang, CEO of Tozy Capital, here to give an update on the Bitcoin mining industry. He'll also be sharing the latest update on our Bitcoin Mining Fund 4. And then at the end of the presentation, we'll go through and do a Q&A. So any questions you have, feel free to use the chat box, and we'll make sure to either address it along the way if we're hitting a topic that your question's timely, or we'll kind of save it for the end. But we definitely want to make sure we cover all the questions. And yeah, with that, Anh, I'll turn it over to you and let you run this show here. And thanks again for being part of this.
Thanks, Brian, for having me. And thanks, everyone, for attending. I appreciate your time. And just an FYI, just add your questions in Q&A and we'll go through all of them, hopefully. But definitely want this to be, an interactive experience. I do have a few slides to go through, but I do want to open up to questions and really have a back and forth dialogue on what's going on, as I'm living day to day on this, and I'm sure most of you guys aren't. So I'd love to share those updates with you. All right, are you able to see my screen?
Yep.
Yeah, so Bitcoin mining 2022. I've been in Bitcoin mining for 4 years, and I wouldn't say it's never been as profitable, but it's one of the most interesting times to be in Bitcoin mining. There's lots of capital flowing in, it's a still very profitable industry, and I actually very bullish on it overall. And I want to highlight sort of a couple of reasons why, and some forecasts that I have on where we think we'll go. So if anyone's following the news, probably people are seeing it's quite a roller coaster ride in terms of Bitcoin price. And that's one of the things that I don't actually love about this investment or Bitcoin. I'm actually not a kind of person who likes to track prices. I'm not a trader, but I do have Bitcoin. I don't like it when it goes down. Although for our investment, it's actually a rather good thing, and I'll talk about that in a bit. But what's driving prices down? Well, there's two parts of it. One is just this obvious cycle of just Bitcoin going up and down. Hopefully that's something that, as you guys are in this investment, you don't pay too much attention, because I think I want to take a long-term view of these things. But I think the main reasons that the market's been a little bit, bearish, and that's been impacting equity markets as well, is the latest Fed announcements and precautions around inflation not being transitory, and it being something that we should be addressing. Obviously, the government printed a lot of money over the past year. Lots of cash and dollars is circulating. Quantitative easing help exacerbate that. And so the Fed is sort of reducing that and also potentially increasing interest rates. Those two things are going to basically remove liquidity from the market. And for markets with low liquidity and that require lots of liquidity, those have been taking a hit, including crypto at large, as well as equity markets, especially tech stocks and growth stocks. As somebody who has a lot of both things, I feel the pain. But I think that's something that, I think there's a lot of signals lately that highlights, I wouldn't say we've bottomed out, but that funds are starting to, be interested in, getting off the sidelines, as some of these things have been priced in. Again, I'm not a forecaster of Bitcoin price. That's not what, I'm not trading Bitcoin. I'm an investor, and I'm investing in Bitcoin and infrastructure and power so that we can get Bitcoin and hold it long term. I do want to highlight some geopolitical issues around Kazakhstan and Russia. And I think Kazakhstan actually holds roughly 10+% of all Bitcoin miners. In fact, last year, I actually seriously explored Kazakhstan as a destination. I also explored Russia. I was convinced otherwise because of the geopolitical risk, which turns out to be a real thing, as Russia's upcoming pending invasion of Ukraine. I highlight this because the shift in Bitcoin mining is a shift towards safe harbors, and that includes shutting down China, which had the biggest impact on Bitcoin mining, and that happened earlier last year. And a lot of those miners went away from China to Kazakhstan and Russia. And those miners now who have found temporary hosting or housing are calling me and some of my partners in the US and Texas and other states in the US, and finding that they value geopolitical safety. So that I believe that's going to be a big shift as more and more miners and more Bitcoin miners and the global hash rate shifts towards safe harbor countries, specifically America, which is generally very friendly, especially Texas, towards Bitcoin mining. I want to remind everybody, or just highlight sort of the economics of Bitcoin mining. The economics are really getting miners, represented here by these ASIC computers, getting power, running the miners and which costs power and that generates Bitcoin. And in the industry at large, what I've seen over the past year at a larger scale is there was a lack of supply of miners earlier last year. And then there was, when China banned Bitcoin, there was a lack of supply of power as everybody's trying to find power. And a lot of that has been reverberating towards the industry. The main thing is that it's causing a lot of delays from a lot of miners and higher prices of hosting and power. So it's one thing to basically look for cheap miners, which is actually one of the things that will generate a higher yield. But you also want lower power or lower hosting costs, which will create a higher profit margin. Both things are important to generate a maximum amount of Bitcoin. And the interesting thing about Bitcoin mining is that it has been actually a better store of value versus Bitcoin, as since November, Bitcoin has dropped close to 40%, and miner prices have dropped close to 10 to 12% since November, and power has actually increased in cost. And so this is actually one of my investment theses for 2022, where I will likely be pursuing more data center hosting. And that's for some who have invested in the data center fund. We have a lot of really interested clients already signing up for it. And we believe that's going to be a very profitable venture into the next few years. I also want to highlight another trend that I'm seeing. And I'm representing it in these three categories. One is S9, S17, S19. And you can think of this as S19 as the current generation, the newest generation, the miners that we will likely buy, and S17 being the older generation of 2-3 years old, and S9 being 5 years old. And you can see that on the right-hand side, on the rig installed, you can see that there's still a lot of S9s running. Well, S9s become at the average market rate of hosting and power, break even at around $30,000, which means that if Bitcoin price falls below $30,000, then those miners actually get removed from the network because it becomes no longer profitable, and the S19s become more productive. I want to highlight that as one of these things that is happening right now, as there are machines that are hosted at higher costs that just won't be profitable because of their older machines. And they're coming off the network, which generally makes everyone else on the network, or all the current miners, more productive. S17s are around a $20,000 break even. S19s on average is around 10,000 currently.
And Eng, a question came in on just, how much of a risk is there that the technology purchase now will be less fruitful in mining over the next 2 to 3 years? And I think you kind of hit on that a little bit with some of the older machines, but I don't know if there's anything more to elaborate on there.
Yeah, so really there's two things you're investing when you're investing in Bitcoin mining. One is the future hash rate production, and that's going to be eroded over time as more miners come online. The second is the residual value of those miners, of those machines. And the residual value of those machines are going to be eroded over time as new technology comes out. What I've been seeing from Bitmain and the major manufacturers are a trend towards efficiency, power efficiency, not dramatically increased production. And so that means that they've sort of reached not necessarily plateau, because there's this ways to go still in terms of the nanometer chips. Though that's going to drive higher production, but they're really reaching sort of a critical mass here, and they're really gearing towards better power efficiency versus more production, which means that some of these machines are just selling at a higher price, and our S19s that are a year old are actually still at the same cost. I'm going to highlight one little story. Our first fund, we raised funds in March, and we deployed them in a smaller batch with Compute North, the latest gen S19 Pros at the time. They no longer sell those. Those are still actually quite profitable. We bought them for $10,000 each. Over time, we've since mined, and we made close to 65% return, 55% return on our investment through Bitcoin, and this is after expenses. To this day, I'm still getting offers for those miners because of the contract, and that they're live now, and they're in America for more than $10,000. So I could probably sell them for $11,000. A month ago, I could probably sell them for $15,000. But I want to highlight the fact that that miners do retain a very nice store of value, and that these generations of new miners come out every year, but it's very much incremental. It's not at a geometric speed as as it used to be. Another thing to note is really where we're going in future hash rate, which is to say, how much competition is there going to be in the future? One of the things that I've been advocating for our investment is to get online as fast as possible, within a reason, because there's obviously a premium to getting online soon. But the big reason is the fact that we'll just have a lot more competition, which means that we'll be all fighting along the same lines with the same 6.25 Bitcoin every 10 minutes. And all these publicly traded companies, which I'm very familiar with in most part, have ordered a lot of machines. And if you just assume that they would install those machines at the end of the year, the pie of hash rate will grow and our production will shrink. So we're definitely racing against the clock. But I'll caution the fact that most of these guys have made orders. I don't believe Bitmain's can be able to deliver all of them. And the most important thing, I don't think that hosting space and power is going to be solved by the end of the year. So we'll still see a very nice profit margin. I want to highlight the fact that early in 2021, we were profitable at around 85% profit margin. On the same fund, we're now around 76%. So dip in profitability. But when I started mining Bitcoin in 2017, my profit margins weren't this good. It was around 40 to 50%, which is still pretty good. So I want to highlight that really decent economics still on average. We're at a level where we weren't before, for sure. But I always think these things are sort of temporary. And given a 5-year horizon, I'm very bullish overall on Bitcoin mining. So I do want to talk about some of our feature sites that we've been developing and highlight what's going on there. First, I would like to reveal to everybody, I've been talking to Argo Blockchain in conjunction with Compass Mining for the last 4 months. And they've been developing this site for the last year in Dixon County, Texas, Helios. Check out their website, check out their Twitter. They have lots of good updates on it. And they're planned to have that delivered at the end of Q1. They're also working with an immersion cooling technology, which I'm familiar with that partner. And they're leveraging immersion cooling in very hot Texas. Texas is actually a really great place to mine, except for that it's hot and humid sometimes, a lot of times, and which is not really great for air-cooled miners, which means that you need to find solutions like immersion cooling, which allows you to remove some environmental concerns around the heat, and also gets you higher productivity. So I'm pretty bullish on immersion cooling. I'm exploring that we're doing that in Fund 3. And I think it's something that I would explore more deeply in future funds as well. Now, I want to highlight the fact that we will likely be going to, taking a piece of this site to partner with them as they're building a 200 megawatt facility. And we'll taking sort of a first front piece of it. We're still negotiating final terms, and I've been negotiating that for a long time, which is a good thing because the market has moved, which allows me slightly higher leverage at this point. And I do want to let everybody know that all the terms are the same as I mentioned. I've been letting Ryan letting you guys know, but I've been talking to some other big public companies lately who might get into action, as we're in a very good place because we were well capitalized. The good news overall is actually that we could have jumped the gun here and acquired miners early. And my forecast on futures shipping on miners, I wanted to time it right so that when we secured the site and we secured all the everything, we wanted to make sure that we could deliver miners as expeditiously as possible. That meant that I was delaying the purchase of miners. That means that we're actually taking advantage of this dip. I hope that Bitcoin keeps going down. It's actually gone up today. It's unusual because usually when I have webinars, Bitcoin usually go down. But a prolonged dip in Bitcoin actually creates more panic sellers of Bitcoin miners, which means that I could potentially scoop up miners at a low cost basis, allowing us for higher yields overall. So that's something that I'm monitoring closely. Obviously, Bitcoin price can keep going down, keep going up, but we're actually in a better position. And it was something that I was hoping for secretly for this investment, because it would overall be a beneficial thing. So I want to repeat that overall timing of the investment actually it's better than ever. It's better than if you were invested in early November. And
like if you bought Bitcoin outright.
Yeah,
correct?
No, if you bought Bitcoin outright, you would be down 40% or a little bit more. And if you bought Bitcoin miners, you would probably be down on 10%. And I would be looking to buy those miners. Now I'm hoping it goes down another 5%. I'm tracking those prices closely. There's a natural floor to them because a lot of people have ordered those machines. They are kind of just holding it. If you think about Bitcoin and Bitcoin mining, Bitcoin is a much more liquid, natural market, right? It's a buy and sell. It's going to drive the prices. Bitcoin miners is like buying real estate. People don't know who's the buyer, people don't know the seller. It's an imperfect market. It's really not, Coinbase where you can just go and buy and sell stuff. So you can make some really good deals. You can make asymmetric deals, and you can, that's why I love about real estate. You can get really great deals in the same neighborhood. You get a bad deal. It's all where you acquire it. And so Bitcoin mining actually has been a better store of value than Bitcoin.
So in a perfect scenario, we could end up getting a pretty nice discount on the Bitcoin mining machines. And then when we actually start mining, if Bitcoin, got back to where it was initially, that would be kind of the best scenario possible, correct?
So when I first modeled the everything, I modeled it at X amount of cost on the miners. I'm forecasting a 20% reduction. First of all, I was a little bit conservative on my initial forecast. And now I've gotten more recent estimates. And I think I'm still being a little bit conservative because I'm buying at a scale. And I'm also being very opportunistic with buying because I think there could be some distressed assets, right? You think of it as a short sell. You're buying from potentially overstretched companies, public companies or private companies that have acquired a lot of miners that don't have hosting or ran out of capital and leveraged a bit too much. And now that Bitcoin price has gone down, that they're assuming that prices stay at 60K or something, and that would generate enough returns for them to pay their loans. These are things actually happening in the market, and I'm being very opportunistic. We are actually in a very good position overall, and I think we're going to continue to try to strike while the iron's hot, and hopefully Bitcoin doesn't jump up too much in the next few weeks. Right now, it's actually Lunar New Year. It's happy New Year, Chinese New Year for anybody who's Chinese or celebrates that. I did a lot this weekend. But what it means is in China, they've been shut down for this whole week. They will be shut down for this whole week, and there won't be any shipments coming out. So prices of miners actually are frozen for the most part because people aren't really doing business. Although I'm securing some contracts here and there. But I think there will be a lot more activity after the 7th of February. All these things I'm tracking in real time, talking to my counterparts in China and my logistics supply guys, and talking to Argo tomorrow to add some more provisions to make this a really great opportunity. I do want to highlight sort of why I like Texas. It's really Texas is a market where you have a lot of solar and wind production. Surprisingly, well, not surprisingly, because lots of sun and lots of flat lands to create wind, and that generates a lot of power and a lot of cheap power that isn't being used anywhere. What you kind of need is to deliver power to where power production to where it's being used. The alternative is to deliver usage to where it's being produced, which is what Bitcoin mining does. This parcel of land is 300 acres in the middle of nowhere, but it's not really in the middle of nowhere. It's middle of right next to a 5,500 megawatt substation, one of the largest in America. And it generates a lot of power from nearby wind and solar farms, which we call it congested power, which means that because of the poor state of our transmission grids, we're not delivering those power efficiently to nearby cities. And because where it's at, which is not kind of in the middle of nowhere, we can get the cheapest power as close as possible, as our transmission lines are very close. And the interesting thing about Bitcoin mining is that it's one of those things that you don't need to be on 100% of the time. Yes, you would like to be on 100% of the time, but unlike Amazon Web Services, that if that's off, your website's down, your iCloud's down, right? You can get so many bad. Facebook is down for an hour, and that's because the data center is down. So with Bitcoin mining, you can be down an hour, you just lose that profitability. That's not great. But because you can accept those terms, you can actually get a way better power rate, because these are the edge cases that makes power expensive. These are the edge cases where if you can accept the fact that you can be shut down for 8 to 16 hours a year, and that might or might not happen depending on if it's a fluke storm or whatnot. That means that your overall power rate would be dramatically cut. So those are the kind of things we're taking advantage of in Texas. for Bitcoin mining. It's one of the interesting things about Bitcoin mining as well. So the other part is immersion cooling, and it's definitely an emergent technology that we're deploying in our third fund. Lots of immersion cooling folks are telling the increased hash rate, which essentially is if you're generating this much rent, now you can generate 30% more rent by overclocking it and putting more power into it. So it do cost more to put more power into it, but usually these machines in air cooled, meaning that you're sitting on a rack, blowing lots of hot air, you try and cool it down. And what that means is that it will just overheat and blow out and it will destroy the machine. You don't want to do that. But in immersion cooling, especially with oil cooled or water cooled technologies, you can actually get really nice temperature control that you can then overclock these machines, because these machines are the big capital expenditure, and get more production. So you actually get a little bit better advantages. Now, the downside is that immersion cooling is a little bit more expensive to build than air cooled, which that's what we're negotiating with Argo right now.
We had a question I saw come in on the West Texas site on Argo. I think the question was, do they own the site?
Yeah, they own the site. They own the 300 acres site. They're building it. They've been building it for a year. They own the PPA, the power purchase agreement. They own everything. So and they need additional capital to buy miners. And we're working with Compass Mining, a longtime partner, and I'm an early investor in them, to take advantage of some market conditions right now.
Great.
So for those, I'm still pursuing Sandusky, Ohio site, and I think it's a really great data center site. The power rate is slightly higher because it's of the grid there, but it's ready now. Where I'm trying to negotiate with subtenants to take the space. You can see that picture here. It's a huge space. You don't need that much space. It's 1.3 million square foot to build out our data center. We actually need only around 80,000 square feet. And we've gotten bids out and we're working on ordering everything. It's a very ready-made place. It used to be a GM plant. And in World War II, it made ball bearings. I'm not sure what those are, but I'm sure that's important. And so it's been a car manufacturing plant, which generally uses heavy power. So I've been negotiating with some other, actually one of our partners, Elite Mining, on potentially building manufacturing here and taking up some of the space. But it's a really nice site. We're developing it. It's been a little code, so we've been delayed a little bit. As Ryan knows, it's Ohio's code right now. But why I want to highlight this is that I'm exploring lots of options, and the biggest thing that I'm seeing in the industry at large is when you have options, you reduce your whether you use it or not, it's still an asset. You can still sell it at a hosting premium, and I have calls almost every week with folks from China and public companies who have lots of delays in their own infrastructure build out, wanting some space at a very high premium. So this is something that I'm very conscious of in terms of an alternative to some of these investments for self-mining. But it's definitely a good plan B, and we're getting the cost basis as low as possible. We've signed a contract to get half of that rented out already.
So Anh, just to clarify, so like having multiple sites and with the data center income fund, I mean, we've got a lot of flexibility to either lease up, the space that we have. If we want to at some point grow into these different sites, I mean, we have all that flexibility, and that's going to, set ourselves up with the most options, long term. And then obviously we're going to pick the site that is most profitable for the mining that we're doing, correct?
Yeah, it's all about profitability. And as an investor in this fund myself, and a big investor in this fund, I want to make sure we make as much money as possible. We're structuring it so that investors get paid first as well. So if it's not profitable, we're not going to make money. And that's why I'm very invested, besides the fact that I want to succeed very much. we're looking at these things as a bundle of assets. I also, not mentioning here, I haven't talked to Ryan about this, is that we've signed a big contract with Compute North as well for 24 megawatts in Oklahoma, which will be delivered in June. Unfortunately, that's June. This is potentially March. So timing, by the way, Argo blockchain, March. Potentially there's another deal that's sooner. So Ryan will talk about that in a bit. But these are exciting opportunities where we are well positioned to take advantage of those opportunities. And so want to just lay out some contracts for 2022 to take advantage of the macroeconomic conditions, which is lots of miners going to be leaving Russia and Kazakhstan and have left China and haven't found homes, and they're going to drive up prices for all the utility parts of power, transformers, substations, racks and PDUs, etc. And it's going to create a feeding frenzy that, while has been exacerbated in Q4, I think it's not going to dissipate. And because I've been in this, we've been working with Ryan on this for quite a while. We've been able to get ahead of line on a lot of these things and signing some contracts, so we could just sublease them at the very least at a very nice profit. But it does give us flexibility, which allows, if Bitcoin price goes up again, which obviously it's my assumption, we'll be in a very good place. Right now, my objective is to capitalize on this dip, take advantage of the downturn, and do it in a way that sets us up for much more returns in the future. And ultimately, that's where I think we are versus where we were 3 months ago. I do think we're in a better position to take advantage of the price action of Bitcoin. If you're buying Bitcoin at 30,000 versus buying it at 60,000, I think, and it ends up being in space, you're going to end up in a better position. While the conditions don't translate the same math, it generally trends the same thing. So we're looking at a better acquisition cost basis. When you buy real estate, it's all about at what price you buy it. So I'm not a trader. I'm not timing. Maybe you can tell you so if it goes down a little more, but at the very least, we're in a better position than we were 3 months ago, and especially since we're very well capitalized and we haven't spent most of the funds.
And we have really nice tax benefits, right, coming along with the investment in these machines.
Yeah, I was actually having a very nice argument with some or a debate with some other miners, and one of the things that, at the very least, you're going to get a very nice tax benefit, and the machines are 100% depreciable, and the machines are close to 90% of the cost of this investment. We're spending the remainder on shipping, setup, labor, and some capex here and there. But for the most part, we're spending money on machines, which can be accelerated depreciation. So really great tax benefits. And I want to just highlight the story of our first fund. Be very transparent that we launched it when Bitcoin was at 60K. It went down to 30, and we started mining when it was at 30. We then sold our first Bitcoin, first full month of mining at the end of July, and we got more returns, 9.7% returns. Then we forecasted 5% returns based on Bitcoin price. But what we didn't forecast was that half the global hash rate would be removed. That has since came back since December, we've gotten all-time highs, even though the price of Bitcoin at 5 December is close to what July was. And that just highlights the fact that all these miners that left China, for the most part, found homes, and all the future orders that have been made in Q4 have also found homes. And that will be a trend that continues. But while I think that mining Bitcoin is actually a very interesting leverage into Bitcoin, your cost base is sort of fixed. And so if Bitcoin price goes up 10%, your returns on a cash and cash basis, it goes up way more than 10%. And also the downside is true too. Leverage does create that risk. But the other side of it is the residual value of the asset itself, the hardware. The hardware actually is, because of supply demand of Bitcoin miners and how much people have understood how profitable Bitcoin mining is, meaning that lots of public money, lots of private money is still flowing to Bitcoin mining, that I could sell the miners at a much higher cost basis. And we could have made a lot more money. And Bitcoin price has gone down 40% since when I first bought them in March. Could have made it 160%. Bitcoin price goes down 30%, 40%. So these are sort of the trends that I think it's hard to really highlight until you see them act in real world. One thing I'm seeing right now is that because Bitcoin price is going down, and this is always my forecast, difficulty will go down too, meaning that we'll actually make more Bitcoin from month over month. So these are trends that create a good reverse correlation to what price is. Obviously, we would like price to go up. I would like it to stay a little bit flat for now, maybe go down a little bit so that we can buy the dip and then go up. And so these are sort of the trends that we're looking at, but I'm going to take a 5-year view as well on all this. So that's the presentation. Got a little deep into things, but hopefully this was educational. Happy to jump into questions.
Yeah. Oh, thanks, Eng. This was a very educational and a great, dive into the industry, the fund, and just the operations, things that are kind of happening behind the scenes that not everyone knows about. So thank you for bringing that all to light. And we wanted to use this opportunity to take questions from investors too. I know there's been a lot of questions, and I'm sure there will continue to be a lot of questions. But since we have Eng here, and we've got a great start to the fund, just with the level of participation from our investor base has just been phenomenal, and we expect it to continue to grow. And with that, I just want to make sure that everyone who has some unanswered questions has the time to really ask what's on their mind. So I guess we'll start in the I think we've got a couple areas where questions are coming in. I think probably the chat, is that the best place to address questions? I know a few came in.
This, if you guys can ask the question in the Q&A as well, but let's go to the chat.
Okay, you want to go to the chat first?
Yeah.
Okay. I guess we can just start kind of right at the top, Eng, if that works. Will we be talking about the new mining algorithm, which requires far less power? Is there anything?
So that reference is to, I'm constantly updating the model. I want to make sure that I have realistic expectations for what profit really looks like as an investor myself, as well as setting expectations to investors. And so that model won't ever be perfect, but I can always use the latest data points. The latest data point is that I believe, based on the Argo site, that our power will likely be sub 3 cents. Historically, they've been paying 1.5, 2.5 cents. In other hosting scenarios, and on the market right now, it's around 7 cents. So you're looking at around half the power cost, which means that and with power being around 90% of the expenses, you're looking at a much lower cost to mine Bitcoin. I believe that was another question somebody had. So while the average cost of mine Bitcoin is around 10K with using the latest gen machines, which is what we'll be acquiring. If you have sort of the lowest cost in the nation of power, you can see cost to mine Bitcoin at a much lower cost. So I'm forecasting around 6,000 right now. It will likely go up depending on what difficulty looks like.
You said about 6,000, you're saying?
Mm-hmm.
Okay, great. Let's see.
And I was going to answer this other question. So somebody said S19s, which is the latest gen machines, break-even is 10K. And that's based on an average 6.5 cents, which is sort of at the industrial level where it costs. Right? You have miners mining in Europe for around 12 cents. You have miners running in Russia for 4 cents. Those might be shut down soon. And you have miners running in Texas for 2.5 cents. It definitely goes all over the place. And the variable cost is one part of it. There's also the upfront cost. which definitely is consideration as well. And so some of these things, like in Sandusky site, where our cost is closer to 4.5 cents, which is more than 2.5, more than 3 cents, still below average on industrial level. Upfront cost is cheaper. So that's why it's definitely still a contender in this whole thing.
There was a question here on curious about the new Intel chips optimized for BTC mining. Will these be available, or will it take some time for these to be released? Any thoughts or analysis? I know it just was announced, but anything you can speak to?
It's funny. I've been aware of these chips for quite a while. I know the guys at Intel. They used to work at Apple, guys. And
you were at Apple too, for those that don't know.
Yeah.
We didn't get into Eng's background here, but he's pretty well connected, very smart guy, got an economics degree from the Wharton Business School. So I'll leave it at that. But
yeah,
and he's into crypto big time, and
it's,
he does very well with it. So
it's funny. Like I use a lot of the same connections I do now that I used to work at Apple when I worked on iPhone and then Siri, where we're using a lot of the same logistics companies and manufacturing companies. TSMC is the biggest supplier of chips. Intel is another supplier of chips. And I had a potential opportunity to buy their first batch test units in Q3 of this year. So it'll be Q3, back around 3 months ago. I didn't buy it because I don't like to generally buy beta units of things. But I definitely think that there's a big appetite for miners made in America, and I'm very much a proponent of that. I don't think they're going to be ready to go until next year in terms of economic industrial scale and compete against China. But I'll definitely be a purchaser potentially a year from now.
Great. See, high level timeline, just where we're at with the fund, just kind of everything we covered today. If you could just, share where you think we are for as far as timing goes, and
let's just make the assumption that Argo is the site we go to, which is my assumption as well. Although the same will be said for a few other options, just since honestly, March is the timeline we're being communicated. Now, to the extent that I've been communicated many things by many partners in the past, and I can control what I control, which is delivering the miners to them, and they had to deliver the installation. And that's sometimes plus or minus a few weeks. I would imagine that we're hashing it live in April, with probably most of it in April. So delivering to you Bitcoin in May. And probably by June, a full batch of Bitcoin, meaning a full 100% production.
Great. As far as, I guess here we got a question on the government announcement about regulation.
I welcome regulation. I always welcome regulation because it brings clarity to the market. Clarity to the market, predictability to the market brings more investors, institutional investors. There's lots of people who just won't buy Bitcoin, who might believe in owning 1% of the net assets in Bitcoin, or 5%, whatever it is, but they just need more clarity, more protection. That's why they invest in trust or invest in ETFs. And as these things become more regulated, it means that the government actually is approving of them as in a certain realm. I also think that from a state perspective, being in Ohio, being in Texas, these are Republican states, friendly business law states. In Ohio, for example, there's lots of Rust Belt manufacturers that no longer are useful for their original build. And so Bitcoin mining is creating a secondary life for them. While we don't provide as many jobs as GM did, we're still reusing what used to be an unused factory, and we're providing a certain amount of jobs and definitely a good tax base. So we're actually being wooed by certain counties, and I think it's going to be a trend into 2022 as well.
Great. Can you describe the relationship between the price of Bitcoin and the number of Bitcoins that will be mined? Did I hear you say that we will mine more Bitcoin if the price continues to go down or stay lower?
Yeah, so there are two factors. One is gross mine and net mine. Let's talk about gross mine, which is how much Bitcoin we mine. And that's going to be a factor of difficulty. What I mean by that is if me and Ryan are the only one mining Bitcoin, then we equal share one machine, and then we'll take turns in getting Bitcoin, or we get 50% of Bitcoin. If Ryan goes away for some reason, I'll get all the Bitcoin, and that Bitcoin number is fixed. So when you include more people into it, more miners, and we're now talking about millions, and so if you were early on, you could be making a lot of Bitcoin early on. I think we're at a level where very institutional level, which I like that because it's now an investment. But when price goes down, it becomes less profitable for miners to mine Bitcoin. It becomes mostly unprofitable for people with high power costs and low efficiency miners. And those are the old generation miners. In fact, in 2020, right after the crypto crash of then, and then right when COVID started, crypto crashed, and lots of machines just went offline. And they didn't come back online until crypto resurged in 2021 because it wasn't profitable for them. And these were the machines that were 5 to 6 years old. And so 6-year-old machines are running now because Bitcoin is at 38K. It might not run at 30K. So this creates this benefit where if you have the latest gen machines, you will be the last man standing. And so this trend will continue to exacerbate. And eventually we'll be not the most efficient machine. We won't necessarily be the machines that will be the last to turn off. And that likely will be in 5 years. But if Bitcoin's at 100K, it can be profitable for a long time.
So yeah, so Bitcoin is at that price, and machines are still working, and obviously it's profitable. We'll continue mining as long as we can, correct? Until it makes sense to probably not mine.
Yeah.
So,
exactly.
Okay. Thank you. Let's see, we got one over here. For investors in Mining Fund 4, who will be choosing to take distributions of Bitcoin? When should we expect to be asked for wallet address? Just want to make sure I didn't miss that request. Yeah, we purposefully did not ask for how you want to receive your distributions early on. Number one, the portal, it doesn't have the best setup to get that information right now, and we didn't want to overwhelm investors with having to decide. So the plan is, when we get closer to actually sending out distributions, we're going to be reaching out, and I don't know if we're going to have a certain format, but we want to make sure that we, for investors who want to receive it in Bitcoin, we get them set up. We have a test run that we'll do to make sure the wallets and the transactions are valid. And then obviously if you want to take it in cash, that's a pretty easy process as well. So you have not missed anything. We're going to be doing that. I don't know if there's a specific timeline, Eng, for when we want to start doing that. But I know we still have time to kind of figure that out.
Yeah, we'll likely start at the end of February, early March to do that. It should take only a week. And sometimes it makes sense to take in Bitcoin and cash. If it's a dip, would you want to sell your Bitcoin now versus keep it if it's high? But I don't know these relatives. I'm not a trader again. I'm not trying to have trading advice. What I like to say is that when you do take in Bitcoin, you do have ultimate flexibility, especially if you put it into a Coinbase account. That's essentially just an exchange where you can sell it whenever you want. And so you can sell Bitcoin. It's a very easy process. It's actually very easy for us. We're sending around 200 investors already Bitcoin every month, actually around 240. And we'll double that in this in March and April. And so we're looking to, we figured out this whole system. We know how to send it very fast. And as soon as we'll send everyone an email, you confirm, we'll double check, we'll triple check, we'll send you a test deposit, and we'll double check you got that deposit. And we won't send you, your first big distribution until everything's like finalized. Because once you send it, the great thing about Bitcoin is that it's decentralized. The bad thing about Bitcoin is that you can't find it anymore.
All right. So we have a question here. K1 will be distributed soon. I don't know if that's a question for the data center income fund. I know that there were some tax benefits in 2021.
Yeah, so
answer it that way, and then obviously with the Bitcoin mining fund, feel free to take both of them because I'm sure
Mhm.
both are going to be questions investors are going to want to know answers to.
Yeah, we're aiming to deliver the K1s in beginning to middle of March. And everyone who invested in 2020 will get K1. Of course, the 2021, I mean, those investment in data center will get the added depreciation benefit.
Yeah, and then for Bitcoin, since the machines haven't been purchased yet, we'll realize the depreciation benefit in 2022. Whether you invested in 2021 or 2022, that's when the K1 is going to become meaningful from a tax perspective. Okay.
Mhm.
Great. Let's see. Okay, another question here. If you do sublease some of the space, would you anticipate overall returns to be better or worse than originally estimated, or too hard to tell?
Yeah, so the data center is actually incorporating some of that economic benefit. And so from a fund perspective, I don't know if we'll actually see a lot of that benefit. I think one thing that I like about the subleasing spot and really hosting in general is that you get your payment in dollars. And so you're kind of inoculated from Bitcoin price. Sometimes you actually get it in dollars and Bitcoin. So one scenario that I'm talking to somebody, a big miner, is them paying 6 cents. So we'll get a nice 2.5 cent spread, depending on where our power cost ends up, and how much operation we got to pay for maintenance basis, and then a 10% profit share. So we actually get 10% of their production. So we actually get return of capital back on just the contract itself, regardless of where Bitcoin goes, because it's collateralized against their miners, which is significantly more value than the actual contract. So if they don't pay, we would compensate the miners. That's also the deal I have with my miners. We're not hosting other people's stuff. But I also get that 10% upside. So if Bitcoin goes up, it's actually really good for us as well, because we take advantage of that. But Bitcoin goes down, it's really good for them because they don't have to pay a very high power cost, which is the norm nowadays. They're paying in a lower amount of Bitcoin. This is output of their mining anyways.
Okay, great. Let's see. So on the example you had on your previous fund, when you were referencing the returns, were those monthly returns off of the original investment? For instance, in November 2021, you were returning 2.5K for a 50K investment just for that month. Is that correct?
Yeah, just for that month. So we're likely, based on today's price, and depending on where we strike our miners at, which I suspect will be lower than what I'm estimating right now, will likely be around 5.5% monthly returns. So 5% 1 month, not annualized. Now, if it goes up, we'll be better positioned. If it goes up to 45K, we'll be likely a 6.5 to 7%. If we get back to 60K, we'll likely be close to double digits again. So obviously, it's a sensitive number. Now it's paid monthly, and I think one of the things that I like about this model is that my intention to never hold any Bitcoin. To unlike other public companies, which mine Bitcoin, hold it. We're dollar costing averaging, right? We're selling Bitcoin mine, which might not be the most efficient way to do this if you believe Bitcoin price is really low right now. But we're still selling it to pay for our mining costs, which is minimal because we'll probably be around 80% profit margin. But we're also sending you Bitcoin or cash every month, regardless of what Bitcoin price is. So you dollar cost averaging it for 5 years or more. And so if Bitcoin price at 20K or is it 200K, send you Bitcoin or cash relative to Bitcoin. So I think that's a really nice way to look at it versus like, I'm going to go all in Bitcoin now, which most people won't, and time it very well and then sell at the top and then buy low. I'm not a trader. If you guys are traders, I think there's lots of good opportunities to do that. But this is an investment, and I like the fact that we're dollar cost averaging and taking advantage of all the correlation that I mentioned around if Bitcoin price goes down or if it goes up. If it goes up, we also have the other headwind as well, that more miners will want to come in, which presents itself a good challenge because we actually would probably have lots of people want to buy our miners. and we'll probably have to do the cost benefit analysis depending on if someone's very flush with cash. You could easily get a 3x return within a year. That's literally what happened to a few of my friends that started investing Bitcoin in early 2021.
I mean, the nice thing is that there's multiple kind of ways to make money. There's backup plans. We're giving ourselves the best chance to make the most money.
It's a way better way to invest in Bitcoin than Bitcoin.
Yeah.
Unless you're like a really great trader, then maybe you're going to be better at timing the market. But I think this is a fundamentally better way to invest.
Yeah. See, one question on when do we anticipate distributions beginning? I think we addressed that potentially right in May if we started, mining and
if we mine for a week in March, I'm going to send you distributions in April. So it will be a smaller one, but I want to send distributions as fast as possible. You guys will work on that dashboard as well. You see how much we mine. It will be very transparent. And so you can see the wallet that we mine into. It will be scraped every day from our mining pool into a wallet, and then we'll send to everybody right in cash or Bitcoin. Not every day, every month.
All right. Let's see. Can you dive into more about the end of the fund? Is it closed after the 5-year mark, or when will the machines are not efficient enough to be profitable? Is that what would be kind of? I know that you mentioned potentially you could get an offer a year from now and it's very lucrative, but like what would, I guess, if we're anticipating this to be, say, a 5-year hold, what would it look like if we unwinded the fund at that point, assuming that, I guess, everything went as planned? What would that look like?
One thing that I've debated about with some earlier funds is providing people liquidity. Right? Obviously, people who bought big into a fund early at 60K, they're up a lot still, even at 38K Bitcoin. But they're not liquid on the majority of the thing because that's on the miner side. What we could do is, because there's a premium on hosted miners, we sell those and then buy a lower cost basis because we're building out these sites, right? That's sort of the key element here. We're building out these sites, and yes, we're subleasing it from Argo because I think that's a very good deal, and potentially some other sites that we're looking at. But we've built sort of the partnerships and sort of tracking for all of infrastructure so that we can buy hosted miners, sell them at premium, or buy miners at cheap from China, sell them at premium hosted, and then and that's usually around a 30% spread right now. So you're seeing a really nice spread just based on logistics and supply chain. And I know this because I'm taking advantage of it on a personal level, at a smaller level, making a couple $100,000 here and there, even when the market's going down. So I think that's why I'm very familiar with the Bitcoin mining market and how everything works.
Great. Okay, we answered that question. Let's see, any estimate, what is the inflection point when the price of Bitcoin rises to the point where inefficient miners? Okay, I think we answered that one when they kind of come off the grid. Let's see. Okay, some good comments here. Okay, this question that we've talked about a little bit, and I think it's definitely relevant. But down the road, do we anticipate being able to share, lend, borrow? What are the opportunities in the DeFi space? I'm assuming this is, again, regarding, Bitcoin in general. I know we talked about, for those that take it in Bitcoin, hold it in Bitcoin, over time, you can actually, borrow against that and use your Bitcoin holdings as collateral and kind of have the best of both worlds, right? Where you have this asset that, historically has been appreciating. And if you could borrow against it and then reinvest into another asset, you actually never sell it. So you don't have the tax hit, and you have a, really low interest rate on your loan, and you've got, another way to have liquidity. And you actually showed me this live, and with your ability to do that on your own personal portfolio, obviously it's very fascinating. But again, we're not suggesting you do one or the other, but we do have a lot of investors I know have asked me, because it's my plan too. I mean, I want to hold on to Bitcoin long term and really, borrow against it so I can get that liquidity to reinvest. but yeah, could you share maybe what that could look like, and just anything from your perspective, since you are
Yeah.
more
Uh,
versed in actually doing that.
Yeah, so DeFi is all about decentralized finance. Finance is everything we use nowadays, but in a way that uses smart contracts, meaning that it removes all these middlemen, suits, people working in banks, those real estate, those banks, a lot of costs. And so you actually get really great returns, LTVs, and other stuff. So you think about if you had $1 million of Bitcoin and you put into a smart contract DeFi fund, DeFi, you could take a leverage up to 70%, so $70,000 out. So and you get earnings on that $1 million, and you get paid on the 700. Right now, cost of borrow is around 3%. Cost of you get around 1-2% on that. Although there's other protocols that you get around 7%. So from you just staking your Bitcoin and earning yield on that, there's some protocols that allow a 7% returns right now. So there's a lot of these options. I would probably want to provide you guys a really nice opportunities once we're up and running, as I'm really focused on this, but it's something that I'm doing anyways. I would caution that, obviously leverage is risky in a downside scenario. So you always want to take advantage, monitor closely or have low leverage. That's what my intention is, right? If Bitcoin's at $1 million in 6, 7, 10 years, and I have a lot of Bitcoin, which I do, I would probably not, I would probably be a big believer in it because I've had it for so long. But I would want to take cash out in some way, and taking a loan on it, it's a tax-free cash out.
Yeah, and just to kind of, I guess, add to that point, like down the road, if Bitcoin did hit $1 million, would you say that, 5, 10 years, there's going to be likely less volatility with the market cap of Bitcoin going up? Because right now there's obviously more volatility, but the larger it goes, the less I think we're going to see just the fluctuation, which again is the volatility. So I think, getting in now, if it did, hit some of the targets down the road, it's a nice store of value, right?
Yeah, no, that's absolutely correct. With assets like Bitcoin, it was very illiquid and very few buys and sells. As long ago as 2 years ago, and it went up 80%, it went down 80%. Now it's going up 50%, down 50%. And in the future, it will go up 30%, down 30%. And I'm talking about next year or this year. And then the far future, we're going to see movements in the 10% range. And I think once we're past around $2 trillion market capitalization, we'll see that pretty quickly. So I'm projecting that probably will happen end of the year or in 2023. I think 2020 is going to be a very solid year for crypto.
2023, you're saying?
Yeah, 2020. I just need to figure out what's going on with the inflation rate.
Gives us more time to save up, right?
Yeah.
All right, you haven't missed the boat. Okay, good. Let's see. Okay, so for the mining fund 4, when will investors receive the 6% distribution, or 6%, interest on their funds that they're earning right now, or that are accruing while we wait for the first distribution to start?
Yeah. So we'll send that in the end of the year, at December, your last distribution.
Okay, great. Okay, due to the price decline, once miners are turned on, how long till payback? Before it was less than a year, but then longer than a year now. I think, the initial projections were at a 60K Bitcoin payback in 11, 12 months. Now that it's 8 right now, 39 maybe, who knows? But like that's going to obviously extend it a little bit out, right? And that could fluctuate. By the time we start mining, who knows? It could be at 50K. But again, what would be the difference between, hey, initially we projected, when we underwrote the deal in the model, we were at 60K. We're at 38.5 right now. Let's say, what does that payback period look like to investors to receive the 100% of their investment back?
I would conservatively estimate 18 months to 20 months. I'm being a lot more conservative because than I used to be, because I want to make sure that we over deliver on that. I think 12 months is still potentially realistic, but I think 18 months, I would expect 18 months of return capital back.
Okay.
And this is assuming I modeled it around 36K, it's 38K now. Obviously, it could go down 36K. So who knows?
Yeah.
I'm not a trader.
Ang, what's your favorite DeFi protocol?
I'm a big fan of money market accounts lately, and that allows me to essentially earn close to 8 to 9% yields on my dollar-denominated stablecoins, which have no up and down, and then also just leverage on other things. I would say that I'm risk off right now, meaning that I am taking less bets. But if I, had more time, I would probably be making some pretty big bets, as I think the market presents lots of great buying opportunities. I know lots of my friends who make most of the money when the market's down, and that's obviously the old saying, you make your money when there's blood in the streets. And I think wish I had more capital to do that, but it's definitely something that happy to present and recommend to you guys as well. I'm fascinated by this stuff. In some ways, Bitcoin is actually the least interesting of the cryptocurrencies. I think it's a great store of value. I think it's a great alternative to gold as a digital gold. But I don't think it's an interesting technology layer yet. I think they're developing on it. But as someone who's in technology and likes the use cases of smart contracts, for example, I will likely be creating NFTs or tokens, probably NFTs, of my real estate investments, creating some secondary liquidity. And I think in the future, escrows and titles all will be done on the blockchain, as that's a really more secure way, easier way to do all these things.
I'll be excited to see that day when it comes. All right. Let's see. Here's a question. Is it possible to receive your initial return on investment in cash and then future distributions in Bitcoin after, say, receiving your initial return back?
Yeah, I think we can accommodate some changes. Try not to ask too often. It takes a little bit of time. If we have your Bitcoin address ready, it's easy to just switch to ACH because we don't need to confirm ACH usually. And if you've done both, it's easy to just switch back. I say easy. My controllers can probably hate me for saying this, so I'm speaking on behalf of my operations team, and they'll probably say, "What are you doing now?"
Yeah, no, we would definitely want to accommodate investors, but just know that we've got to,
yeah,
we've got a lot, and we'll definitely do what we can. But yeah, absolutely. If you want to start one way and then flip when you get your money back, that's totally fine. Let's see. I know there's one question that's come up. I don't see it asked here, but just for some investors who are investing through a self-directed IRA, I know I don't believe a custodian right now who can take distributions in Bitcoin, but there's a lot of investors who want to take their distributions and hold it in Bitcoin, because part of the return in the fund is the future price appreciation of holding Bitcoin. And so we're creating an option for them to hold on to essentially their distributions in Bitcoin, and then obviously pay it to them when that custodian allows or has the ability to take it in Bitcoin, or we can hold on to it to the end of the fund and then convert it to cash and then send the funds to that custodian. But just anything to share on that. I know it's still kind of early, but that's something we had mentioned to self-directed IRA investors as the kind of workaround option.
Yeah, so we're still evaluating how to best do it, but the way I would imagine us doing it would be we'll hold on to your Bitcoin, which we're actually not going to be holding on. So we'll make sure that you have the same access that we do. So you just always take it, right? It's yours. Don't if we pass away or something happens, is you have access, you can control it. But because it's not in the title of yourself yet, it's not distributed yet, and so it's just mostly an accounting thing. And so that we can then transfer it when that's possible in the future.
Okay, that's great. Let's see, is there, okay, how will we be able to keep track of the cost of the coins that we get for tax purposes?
I'm doing taxes right now for 2021, and I have software to do it, so I'm very happy that's the case. So we keep track on the cost basis on the mine Bitcoin, And so we do have a pretty robust metrics on that, and then we just pass it along. So for you guys, you do not have to keep track of anything. We will give you a simple K1, which will have the cost basis and the and your profits, and so we will have done all the taxes for you.
And so just to kind of go a little bit further on that, whether someone takes it in cash or in Bitcoin, essentially when it's being distributed, that's the tax liability at that point in time. Like Bitcoin could go up the next day, but they're only paying taxes on when they earned it the previous day, right? Or they'll pay taxes on any capital gains if they sell it down the road. But is that far, like when they receive it, there's a certain value associated with it. So for tax purposes, that's essentially what's coming from the K1, correct?
Yeah, and the K1 will have the cost basis as well. So I know somebody, Chris, you're asking on chat. So you have that cost basis for when you sell in the hopefully future, far future, or you borrow against it. Right.
Okay.
Yeah.
I see that. I see the additional question here. Okay. I think we got through all the questions in the chat. Was there more in the the Q&A, right?
Mm-hmm.
Okay. We answered that one. We answered that one. Someone's asking about the Bitcoin mining fund for investor model to be able to kind of toggle around with that. I mean, that's actually available in the portal. You can go in there and download it. And you can, mess around with the future price of Bitcoin. You can toggle with, I think there's 5 different, I guess, variables, right? Conservative, realistic, super bullish,
and
bearish.
you can key your own as well. Okay. One thing that it's Pi Nut modeling as well is if those things happen, what will actually happen to difficulty, which ultimately actually is a bigger factor in what returns will look like. It's something I'm tracking. That's why I'm tracking all these supply chain stuff. It's nothing I can have that much control on. Just like Bitcoin price, I don't have much control on it. I can only just create a better forecast for you guys, at least in the near term. And so for the most part, I've forecasted very closely within less than 1%. As long as I have all the data updated. The latest model in the portal right now will likely be 2 weeks old, and Bitcoin has gone up a little bit. Difficulty is actually going down. So interesting, we'll actually be making more money. And miners, I'm waiting for miners to drop down just a little bit more before making some big purchases. I think there's a natural floor that will happen because lots of people have bought miners at a higher cost basis or early on last year for deliver this year. And those are the miners that I do want to buy from them. And so I'm negotiating those right now.
Great. I think of what's another question with that. Any delays in shipments, supply chain updates? I know you kind of hit on that a little bit.
Yeah, so we're actually not going to be buying directly from Bitmain or from the manufacturer. They do have miners that they are selling. They're not the miners that we want though. And someone asked about the Intel chips. Those won't be delivered until Q3 likely, and only a small batch. The miners we'll be acquiring are feature orders, essentially people who have made orders from 2021, and they have issues with deploying them or aren't capitalized well, and they need, and I'm being very opportunistic with acquiring them at a low price from them. So they're not secondhand, they're new miners, but they just haven't been delivered yet. So they're being built, already manufactured by Bitmain. We're just buying their contract out from them. And in terms of logistics from China here, it was difficult around Q4 Christmas. It's getting better now. So supply chain is still around 10 to 12 days to when they get on airplanes, we'll actually get into these big pallets. So at the volumes we're doing, we're probably going to rent out our own big passenger plane or a cargo plane and have a big pallet of miners, and then we'll secure them and get them here as soon as possible. So we haven't had any shipment just timing issues on shipments so far.
Assuming we'll have some insurance for that.
We have insurance for that. We have insurance for the site as well. Usually the hosting company, and if you're a hosting company, we'll have insurance on that, and we'll have insurance on the miners separately as well.
Okay, great. Yeah, because there was a question here on the, can you comment on the physical security at the mining facilities?
Yeah, so those are very secure mining facilities where there's hundreds of millions of machines, regardless if they're our machines or a lot of other people's machines. And so generally they have very tight security, monitored 24/7. And that's sort of all based on the fact that that's what insurance recommends as well, but also industry standard.
Yep. Oh, how did Aang and Ryan meet each other? Great question. You know, it was one of those weeks where it was two or three, well, two investors I know, and then a third person in the industry, all within the same week was like, God, you guys got to connect. They were just telling me, they knew that we were looking to get into the Bitcoin mining space. And Aang obviously came highly recommended as far as what he was building and doing. And then it was actually, yeah, two of our, we share a couple of mutual investors, and they were just like, you guys got to connect. You guys have, you know, just kind of the very similar businesses, just similar, you know, philosophies, goals, and they're, you know, thought that we would, you know, make a good team together. And so literally we set up a call, and I'll say that, you know, you could tell right away in this business, like I always say, it's about the people and the team. And, you know, you can get a sense when enough people share, you know, good experiences, but you also get to feel that personally. And you just, you know, you put a lot of faith and trust in someone. And I think it was mutual early on. But yeah, we kind of, I think it was a match made by investors and someone who I, you know, consider a mentor in the industry, who's actually connected me with a lot of other people, and another mutual contact, I think, of both of ours. And it was just one of those, you know, we're very opportunistic. We've got great investor bases, and we just felt like coming together, this was going to be a great opportunity for both of us and our investors. And so I'm very thankful and lucky that we connected, and this is just the start. That's the part I'm really excited about, because I think when you find a really good partner and someone that you work well with, you can continue to do more together. And that's my goal, my vision. And I know, Aang, you're a very ambitious person as well. And we want to have fun and do this with really good investors and good people. So I think at the end of the day, like, yeah, you'll be hearing and seeing more of us doing projects together. And especially as crypto matures. I know right now it's just, you know, there's not a whole lot from a syndication standpoint that would make sense other than the Bitcoin mining, but I think we have plenty of opportunities down the road that will come to light, and we'll be able to, you know, really probably merge the, you know, the real estate syndication world with the digital real estate world, and a lot of cool and interesting things that you can do together. And so obviously I have a lot of respect for Aang and what he's built and what he's done, and the opportunity to partner with him on this Bitcoin mining fund for, it was just a opportunity. So
I remember my first conversation with Ryan, and sorry, little tangent. It was like probably 2-hour meeting, just like geeking out about everything crypto, as well as in our own respective funds and companies, and then talking about how we treat our investors and what our philosophies are. And what I really like about Ryan, and he shares the same philosophy, regardless of how well the investment turns out, which oftentimes was a little bit out of control. The market will go up, the market will go down. But I think both of us, I know both of us, have your interest in mind almost always, and that we'll put your interest first. But I think that's something that, you know, to find out in a partner is definitely, you know, one of the things where that gives me a lot of joy to work with somebody who will do right by the investors. And I think that's something that, you know, hopefully we'll do here as well.
thanks. Good question. All right. Let's see. Next one here. What are the network bandwidth requirements for the West Texas site, and are you confident that remote location will have sufficient and resilient capacity?
So from an internet perspective, it's actually not that much requirement. But yes, we do have fiber installation happening in the late next month, and that should solve all of our internet. So from network bandwidth, it's actually not that big of a deal. Typically, You just need a little bit of packets of data. You can even do it in a mobile router, but obviously we have fiber optics.
Okay, this is more of a Coinbase wallet addressing question. Every time a BTC deposit is received at Coinbase and you later go to access another BTC wallet receiving address, the address is different. I'm assuming the old address is still active. Do you know if that is how Coinbase works?
Okay, so what you're saying is you're receiving Bitcoin multiple times, but you're receiving it to the same account, but every time you're receiving it, or at least 2 times receiving it in different addresses. So I can actually tell very easily what a Bitcoin address is, if it's a Coinbase address, if it's not, because Coinbase usually has a very different style. It's actually shorter. But yeah, it wouldn't be an issue. It's such a unique code, and you can have like 10 or 20 of them. Coinbase is essentially a centralized exchange. It's like a bank account with 10 wallets or 20 wallets or infinite wallets that all centralized into your account. So you wouldn't worry about if you give us one address. Don't worry about it changing or your perception changing. As long as we have that address, it's going to be associated with you. It's never going to be associated with anybody else.
Okay. All right. After you finalize capital purchases, will you share a final investor model spreadsheet?
Yes.
Yeah. So I think that'll be important. Like, again, as we talked, this is kind of a moving target, and Eng could model the investment every single day with the price of Bitcoin's volatility, but for purposes of this investment, we have to pick a starting point, which is what we've gone with, and there's going to be fluctuation. But yeah, I mean, it would be good to see when we have some harder numbers and we get closer to mining, what that looks like, because we'll have a better read on things, on where things are heading. But yeah, certainly I think we've got to pick and choose when we find the right time to update it. And I think you said every couple of weeks you've been doing it, right?
Yeah, I've been doing it every week. Luckily, won't do it after we start, because we'll have real world results, and I'll be reporting profitability, number of Bitcoin mined, and your return. And I think from a model perspective, happy to share whatever we finalize. The good thing is that we haven't finalized it, so actually we're at a very good position to take advantage of the market dip. Hopefully it doesn't go up too much in the next few years. I have a lot of Bitcoin, but I have a lot of investments in Bitcoin mining. So it's like,
yeah, it's all good. Let's see. Okay. Have you guys disclosed who the large surprise partner is that you guys alluded to? I think what Ryan's referring to here is that we've been under NDA for a while, and I believe it's Argo and the location, right, in West Texas. And I think you could probably elaborate a little bit more on Argo, but I know publicly traded company, they're on the Bitcoin mining, I think, committee with MicroStrategies, and they're a big player in this space. So to really be able to potentially partner with them in that location, and just what they can bring, the value, and what they see in just this relationship too, and the partnership. So, Eng, feel free to go deeper on that, but that was something, again, we couldn't disclose a lot of this as we're negotiating and finalizing things. And so
this is a 3-way partnership with Compass Mining as well, and they're experts in procurement. Argo has a need for procurement, it has a need for capital. We also have been talking to each other for the last 4 months. I've been talking to Compass since their inception of the company. So I've been working with them very early on. And so we all kind of know each other. I know most folks at Riot and Marathon and Teji. Surprisingly, how few people there are in each company. I never intend to go public. Public companies have a slightly different need than private companies. We're looking to get as much return capital back and investment yield. Public companies want good press release and bigger scale and growth. So sometimes it's a really good opportunity to take advantage of each other's needs and have a synergistic relationship. So these are things that being a private company like ours, private fund, that we can take advantage of, that actually provides investors sort of a better return.
Great. see, any insight into NFT funds or video games usage where investment funds are being raised?
My friend just raised $90 million for an NFT fund. I'm launching an NFT in a month. I keep saying that. And I have a new NFT miner DAO that I'm potentially working on, MINERDAL. There's a mining farm that's owned by DAO. I love the concept of NFTs because it creates digital ownership and in a smart contract way. I don't know of any open funds that NFTs. I won't likely have one. I just sold my last Bored Ape for 102 ETH, but a lot less than that. I didn't know they're going to sell.
Sell it to Bieber? What? Who bought it?
Yeah, I think it was someone famous. But I had 3 of them. I did sell them all recently. NFT market is like going insane still. Yeah, hopefully ETH goes up. Actually, it's gone up like 6% today.
Yeah. Wow. All right, let's see. I think a few more may have come in here. Maybe not specific to this conversation, but would you? Okay, now we talked about that. This is a while away, but hopefully we'll get an option to fund the next deal direct with BTC. Is that something that potentially could happen? I know we had some investors fund actually with USDC. Again, what type of assets in the future could be funded, or again, I don't want to get too far ahead, but like, reinvesting into future funds. I mean, there's a lot of things that, I think are on the table, right? With
one of the reinvestment into future funds is taking your distributions and redeploying it, converting to cash for us, because we have to buy the miners using and cash, and then compounding it. So our first fund, for example, we gave people that option, and we essentially compounded 30% of their returns in less than 4 months, probably 3.5 months, and had them have 30% position of their, so they invest $100,000, would have $30,000 position. So now $130,000 basis in 2 funds, just by foregoing the first 3 months of distributions. I don't know, we'll find out here. I think we'll definitely try to come up with some good options for you guys. We want to make sure that any future investments are really good investments. It's a great time to invest in Bitcoin mining. I would always be just calculating, modeling out whatever it's going to look like in the future. But I do believe that in 2022 is going to be a really good opportunity to invest in Bitcoin. If you're investing through Bitcoin, just let us know. I think we can try to accommodate that. We had one investor want to do that as well.
Okay. I think that might be it. I'm just going through all the questions here. One last thing I just wanted to address, because I know this has kind of come up. It hasn't tonight, but just as far as, how much longer is the fund going to stay open? And just, I guess it's probably a 2-pronged answer, but, number one, we still have room because we can go up to 40 million. And number 2 is that, again, it's a fund is typically open until it's closed, and there will be a cutoff. I think probably a hard date would be likely end of February, just given the timing of ordering all the machines and getting up and running. So I know we've had a couple of different cutoffs as far as funding and getting them the machines ordered, and we've actually benefited by waiting to purchase the machines. We're getting better cost basis, so it's given us a little flexibility and a little bit more room for investors if they we're sitting on the sidelines and maybe want to participate, or for some investors that, want to say invest more, we still going to have it open, likely, a couple more weeks, if not till the end of February. So just wanted to mention that, Anh. I think that's probably in line with things overall. I know we talked a little bit previously on that, and just wanted to.
Yeah.
Okay.
Definitely always want to be flexible. For those who invest early, you get the benefit of the 6% return. And I think in general, we're in a much better position now than before. So it's always surprising what, you invest in Bitcoin mining, you think you lost half your money. In fact, you actually made 20% more. That's
all good. So, well, thank you, Anh. This was great. I know our investors just love the transparency and being able to get their
Mm.
their questions answered. And I think this is a great update. It's recorded, so we're going to make sure to share it with everyone. And for those that couldn't attend, and thanks to all the investors who have still stayed on here. We've got a big group and a lot of great questions too. And we're happy that you're part of this fund and this great opportunity that we see here. So thanks again. And Ang, you have yourself a good rest of the night. And
Thank you.
thanks for coming on here.
Thanks, Ryan. Thanks, everybody. Have a good night.
Yep. Take care, everyone.
Take care.